Hey everyone, hope you're having a good day. My name's Andy. The channel's Finding Value. Today we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. And if you need help with anything, check out findinghighvalue.com. That's where I dive deeper into all of these topics and sectors looking for potential investment opportunities. I share those opportunities with everyone in the community. I have a midweek update that's going to be coming up for tomorrow. You can see that it'll be uploaded to the website, and we do have a special coupon code special that is still active. 50% off the first month only, and a larger discount on the yearly membership. Let's dive in, take a look, see what's going on today. We have weakness in the dollar, which is surprising. This is very surprising. Why is it surprising? We have the dollar getting weaker against other currencies when our markets are selling off, which is surprising. Usually, if there's a fear trade, what you see, and believe me, there's fear in the market. I usually see the dollar rip. I mean, rip. Like in 2020, in that March timeframe of 2020, it rocketed higher during that little time frame. So the time frame that I'm alluding to, not there because that's 2021. Going back. So back here, um, the fear event where people raised a bunch of cash. My goodness, how come when I zoom in, show me 2020? Where is it? Where is it? Okay, here it is. There it is. There it is. The March of 2020, this is what we saw in the dollar here. It was a knee jerk, just everyone running to dollars. That's not what we're seeing. Um, I mean, we're not seeing a move like this that goes straight up. This went from 94 to 103-ish in less than a month. Very strong move in the dollar. Here, we've got the dollar going down. This is like a Hail Mary pass that that someone's trying to crash the markets to get lower. They're trying to get that same trigger where and reaction where people run into bonds for safety. So we all look at bonds, and bonds are split today. I mean, this is a weird dynamic. 2-year yield is down 1.87%. It's pretty volatile, so it's going all over the place. This here is a big bullish engulfing that is signaling that we want to go higher. Higher. Today's the bloody nose. On the 10-year, we're going up 1.81%. And I was in amazement yesterday with the big candlestick and the volatility and the size of the move. So this could be, I don't want to speculate. I don't know who is doing it, but someone is selling bonds rapidly. And that's the only way that you can get this to break back out to the upside. Now, this is what makes me think that it is trying to be manipulated. All right. We entered this big move. It's a big flag pattern. Do you guys see that flag pattern there? The 1, 2, 3 hump. The 3 hump sometimes doesn't go all the way down, it breaks out. Well, we broke out to the upside. And then ever since Trump took office about January, so January 15th, right there, that's January 15th. I think he came into office somewhere around that time frame. It's been like pushed lower, pushed lower, pushed lower, pushed lower. And now, this past whatever here, that was the tariff information. They tried pushing it down. They're using, vague uncertainties, just like C19. C19 is a very similar setup. Push, 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 and look what happened here. Boom, boom. And I don't know if that means that this is a credit crisis or something's going on in the background. I'm not exactly sure. Is this like the beginning of that credit crisis? Because if you go into a credit crisis, you're going to see the long end of the curve. I mean, it's going to rip to the upside. And I'm not trying to inject fear, but it rips to the upside. Is tariffs like the kick in the back for China and some of these other bondholders to say, you know what, I don't want anything to do with it. I'm going to sell all my bonds. And then it's going to raise interest rates, is what it would do, and that's what we're seeing. The 30-year is up 2.6%. WTF? Why the face, right? You guys thought it was something else, I'm sure. But that's ripping higher, guys. And this is a bullish formation. This is not a bearish formation. This is not what I normally see. 1, 2, 3, breakout, squeeze, breakout. So I'll talk about some of this and what I see in midweek update with companies and all that stuff too. But this is crazy. Like, I don't know. I don't want to like get nervous, but like, is there a problem in the bond market here? And I mean, if we start ripping in interest rates to the upside, that's going to have a pretty big negative impact on the stock market, just in general. And that negativity and the fear that gets generated, it's margin calls and all that other stuff. TLT bond prices smoked to the downside, smoked. So bond prices down, yields up. They are inversely correlated. And this is a bearish setup. And this is their attempt here. That's their attempt to try to move it. This is when they pissed everyone else off. So maybe it's negative repercussions. I don't know what's going on in the background here. Jay Pow is going to have to step in here and print to the moon here. Probably do like QE 900 because it's going to, just like Peter Schiff said, there's going to be as many QE numbers as there is Rocky movies. I mean, this is ridiculous. The bond market is definitely getting unstable. The 2 and the 10-year were dropping pretty big here. So the 2-year dropped about 2%, and the 10-year was up 1.74%. That is weird. And we could be coming back down, and this is sending a signal that a problem is existing in the market. This was C19 when it dropped. This was another problem here in 2007, and this was the 9/11 event. Things start to drop down. That was the recession of 2001. Are we going to get a recession? And people, I think, are pricing in a recession. And there's all these tariff retaliations going back and forth. Obviously, there's a lot of fear in the market, tons of uncertainty. According to, not according, but everything. There's all this uncertainty around the whole tariff. What are they going to be? What's it going to look like? Is it going to cause a recession? I mean, you could go 1,000 directions with this, and what could potentially happen. The best bet would be volatility. Now that volatility spiked, I wouldn't make that bet, but QYX TNX ratio, it is up just a fraction today, just a fraction today. So a little bit of a tailwind behind gold, not tons. But gold was up $25 an ounce. The only thing I'll say here is I don't like buying next to these big red candlesticks, guys. But if there's a problem in the bond market, maybe people run into gold. This is a really difficult setup. The market is dang near untradeable at this exact moment because of volatility in both directions. It's possible that the longs and the shorts get liquidated in the same day for like options traders and stuff because the volatility of these candlesticks are massive. Silver up a little bit, but again, this is an inverted flag pattern. Lower, lower, lower is what I would look for. Whenever you get next to these large red candlesticks, it's very little bullish things occur next to these things. Usually they come out heavy and strong in the beginning of selling pressure moves, like over here. See that? Nothing behind it was bullish after that. But here's the thing. And again, I don't like going into the manipulation crap. I really don't. But this was all set up to break higher. So was oil, and so was a lot of other things. And this was like a Hail Mary pass to like rip everything lower, to keep it all in line, to maybe even save the banks because they're short a bunch of silver. So again, this is a bearish setup. They're coming out full force with everything they've got to lower these prices. Oil, silver, I mean, everything. Platinum, again, getting hit. It was up 0.83, but this is still a bearish formation. We're underneath the cost curve. So now we've got the fundamentals say buy the living crap out of it. The technicals say we may have more downside, more uncertainty being unleashed. Palladium also reversal day to day, but to the downside. So we were up and reversed lower. Momentum to the downside still. XAU to gold ratio coming off a little bit. We were going up earlier in the morning, probably because we're on support. The support going across here. It's probably going to hold, is my guess. But again, the stocks could get sold off when everything gets sold off at once, and the size of these sell-offs, the overall selling pressure and range that these things are hitting can trigger margin calls. And when they trigger margin calls, selling begets more selling, which triggers more margin calls, which begets more selling. And then you get into liquidity problems and people try to sell and raise dollars. But how the heck is the DXY down 0.5%? This ratio is still very cheap. We've got GDX up a teeny bit, even though gold was up. It's still a stock. GDXJ flat, SILJ down 2%. Still looking a little bit bearish. And that only looks bearish, not necessarily from the physical metal side, but it's all from people getting liquidated from margin. Crude oil down 3.6. It was holding on in the morning, but it gave way. Still more to the downside, and that looks bearish, especially with the size of the selling pressure candlesticks. Now, if we get down to 50, or even if we get lower, I mean, this puts the government and Jay Pow Pow into a very bad situation. I mean, a very bad situation. We're going to be pulling back on oil production and rigs and fracs, which is all occurring. We have low inventory. If this is, and I don't know for sure, but if this is a manufactured pullback, and they somehow successfully bring this down to 50, which is their goal target, right? And what they are saying, oh, this helps the consumer, even though they're trying to roll over the mother load of debt, try and get interest rates down. We still have low inventory across the world. We we rated our SPR, Strategic Petroleum Reserve, and we're at this level down here where everyone's pulling back on production. How are they going to reverse this? If demand doesn't get hit, if it is only a fear event, then this is going to slingshot. Everyone's going to get short here, and they're going to slingshot this to the upside. I mean, it's going to be wicked. It's going to be wicked. TTF gas, we're down a little bit, just like everything else. I mean, not much was up today, guys. So down a little bit there. Nat gas down 4.4%, pulling on back, below resistance support. Our boy XOP getting hit in the face again. We've got the low holding here, but we did reverse. We tried moving on up earlier in the morning, but it did reverse lower. We are still putting in almost like a double bottom here, maybe. And again, that is very early on that call. I mean, I'm not stating that that's what's going to happen. If the fear remains in the market, I mean, just roll dice. I mean, that's going to be your guess. If they continue to release news and tariff wars, who knows what's going to happen? OIH down 4.5%. It was up in the morning, and again, it was trying to hold its low here, a little wick at the bottom, but it did reverse throughout the day. It came on up early in the morning. Sorry, I might have that wrong there. Let's see here. This was early in the morning there, I think. And then we came on back later on. Maybe this is the morning. Let me see. Let me do, that's 5-minute chart. Hold on. There we go. That's 5 days. So down, down. We shot up higher, slow selling pressure, which is a bullish formation. Bullish formation. And then we came all the way back down with that other news. I do think that maybe, I mean, maybe this is trying to put in a bottom. We'll see. But I wouldn't, it's an early call. Definitely an early call there. Newcastle coal futures bottomed and started to head up. That's looking better for commodities. And eventually the money's going to rotate into commodities here. Eventually. Spreadlessly, Uranium Trust is up 1.37%. It almost did a full retest. Now, I didn't think it was going to get down here, but it did. That tariff information or news that was released, it pretty much bombed everything out. Your setup here is to go long. And then this here was all driven lower, at least from a technical analysis standpoint. So the right call here was to be long, even though the outcome was wrong. It's the extent of what they did to produce that outcome that was also unknown. Uranium futures moving sideways. We've got URA down 1.22%. Again, they released information with China and they retaliated with some gigantic tariffs, which impacted the market in a negative way, but these are basically flat. They were trying to run earlier in the day. Same with URNJ. We've got nickel down 6%, and this is going to look kind of ugly for everything, but this starting to sell off. Copper sold off 1.65%. It tried to turn in the morning, but that news being released. Notice that it's all news. It's not like this is the difficult part that one needs to discern. Are the problems structural in the market, or is it just news? And if they were to release anything, you know, is all of the bad news priced in, so to speak, or is there possible contagion where things get a lot worse for the overall economy and market? And that is yet to be known. And that's where all the uncertainty is being driven. So people are just basically pricing in a recession, I think. COPX down 3.3, and this is going to see a lot of selling pressure across the board here. Lithium down 3, not a very nice looking candlestick here today. We could see further downside. REMX down 4%, huge reversal day today. And again, we'll see what happens. Iron ore down 1.1. Everything's being impacted now because I think speculation on potential spillover effects are starting to get priced into the market. Aluminum down 1.5%. These were all looking good to break out. Man, they stick saved all of this with the news that came out. Baltic Dry Index is down 6%. I mean, that commodities down, they ship commodities. Emerging markets is down 1.4%, not getting spared. It looked like it was trying to turn. We've got MOO down 1.7%. KRE is down 0.93. That's underneath some resistance too. Man, this looked. So there was your move. It was going to try to work higher on Liberation Day, and all Liberation Day did was trigger margin calls for, I think, everyone. XHB down 3.5%. Pretty ugly looking candlestick today. We've got TAN down about 6%. That is just getting shellacked. I mean, everything's getting shellacked. Everything. Look at good old TAN. Russell 2000's down quite a bit, 2.73%. It tried in the morning, guys. It tried. SPX down 1.5%. Momentum is still down here, guys. I thought we'd get a little bit of a bounce like up like that, but nah. All pressure. NASDAQ down 2.15. Looking pretty ugly. SMCI down 3.9. NVIDIA down 1.37, which is pretty good compared to most other areas. Bitcoin down 2.84%. That's underneath resistance here. So the momentum is starting to get generated here to the downside. Ethereum down 5.58, looking pretty ugly. Pow needs to get in here and start shooting his money gun out here. We've got MicroStrategy down 11.26. That's a bearish engulfing. That looks like it wants to go lower. What's Bitcoin at? I'm not sure where Michael Saylor, where his entry point is. I mean, I think it's probably somewhere in here. We get below that. I mean, I don't know if he gets liquidated or what, but it's not looking good. We've got the VIX up 11.4%, and this is where that volatility coming in today. We came all the way down when it was going up, and then we shot back higher as it reversed. Let me see the VIX here. See what happened with the VIX back here. This is 2020. We did a little bit of bouncing around. We came on up and we bounced around a little bit with the VIX up there, and then slowly fear exited the market. So that's kind of what I've got for today, guys. Rough looking day. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys want to hear the midweek update. I'm going to get into some of the things that I'm seeing in the markets, what I'm going to be looking at, what my strategies are coming up, and what I'm going to be doing. But yeah, that's all I've got for today. We'll catch you next time. This is Finding Value.